All right, Gen W, the market is gearing up for a massive week. We've got the Fed meeting, major indices pressing into key levels, and some setups on individual stocks that look incredibly clean if you know what to look for. Today, I'm breaking down the overall market, the Santa Claus Rally preview we may already be seeing, SPY, QQQ, and several high-impact stocks in under 2 minutes each. And as always, I am not a financial advisor. This is not financial advice, just my experience and research. Let's get into it. Before we jump into the charts, let's talk about what's actually driving this market right now. Because if you're newer, understanding why price moves is just as important as knowing where it moves. A theme I've been talking about for a couple of weeks now is the possibility of an early Santa Claus rally, so let's break that down quickly. Historically, the Santa Claus Rally refers to the last 5 trading days of December and the first 2 of January. Since 1950, the S&P 500 has risen during this window 79% of the time, averaging around 1.3% to 2% gains. And even though we're not in that official window yet, the market has been acting like it wants to preview that move early, which sometimes happens when traders position ahead of the seasonality. Now, here's what matters this week. We have the FOMC meeting on Wednesday, and the market is expecting another rate cut. But the real volatility comes from what Jerome Powell says after the decision. Are more rate cuts coming? Does he think inflation is under control? Will the Fed shift back toward quantitative easing, which is essentially injecting liquidity into the system? The most recent tightening cycle officially ended last Monday, so Wednesday could create a real spark in either direction. Bottom line, keep your seatbelts on. This week could be volatile. Let's move to the SPY. First thing I'm watching is the weekly options expected move. This shows where traders are pricing risk. Expected low, 675.57, which lines up perfectly with the 675 key level we've been talking about. Expected high, around 696, which would be a brand new all-time high. Now, here's the big structural note. Since late October, SPY was in a downtrend. Lower highs and lower lows, but after the November 21st low, we finally put in a higher high, and Friday gave us another one. What we haven't seen yet is the higher low, and that's what I'm watching for. A healthy pullback into 675 would check every box. It's the expected move low. It's prior support from multiple breakdowns. The 20-day and 50-day moving averages sit right below. Price has repeatedly respected this zone for 2 months. If we break below 685, we likely chop between 685 and 679. Not a great area to force trades. Under 679, then you can start eyeing puts into 675. If we get that 675 pullback, I'm absolutely hunting longs back to 685 and potentially 689. Upside path, hold above 685, break 689, retest. That sets up continuation to new highs. But early in the week, before the Fed, I'm not chasing upside breakouts. Patience matters. QQQ looks extremely similar to SPY, but with even cleaner alignment to key levels. Expected move high, 638, all-time highs. Expected move low, 613, right where a healthy daily higher low should form. At 613, you have a level above multiple breakdown areas, both the 20-day and 50-day moving averages, a natural place for buyers to defend. Friday gave an inverse hammer, early strength that faded into the close, but we also pushed into the overhead gap and did not close it, which is a caution flag. Below 624, we get stuck back in a balance range. Below 618.50, now we have real room for a short into 613, which is where I'm looking to take longs for continuation, back to 626.50 and eventually 637. If we skip the pullback and rip early in the week, then I need to see us reclaim 626.50, retest it, and see volume kick in before going long. NVDA has been the weak link while other AI names have been pushing. We keep tapping 185, and this zone is crucial. It could become a higher low, or it could be the pivot that flips sentiment. Above 185 on the hourly time frame, things get interesting. You have a thin structure created during earnings. If buyers step in, a retracement back into 195.75 becomes possible. Below 185, I'd wait. The structure gets messy. OKLO, not a core name for me, but this thing trades beautifully for momentum. We based around 85, then broke a lower high from November 20th. Friday gave a rest day, upside paths, break 106, retest, target 111, break 111, retest, and now you've got potential to 120.50 or even 130.40 downside. Rejecting 111 or 106.25 opens a put play back to 93.85. I lean upside on Oklo, but both paths are clean. A beautiful setup forming on Apple. We had a long consolidation, broke out to all-time highs at 287.40, and now we're pulling back to form the higher low. Levels I'm watching between 275.50 and 279, the strongest support zone. I want to see a reversal pattern on the hourly, double bottom, inverse head and shoulders, any confirmation that buyers have stepped in. The 20-day moving average is right there too. If this holds, I'm targeting a move back to 287. Microsoft looks bad at first glance, but the deeper you look, the better the setup gets. We bounced off 468 multiple times, with long lower wicks showing buyers stepping in. That pushed us to 493, then we pulled back to 476, potentially our higher low. Now we have a clean overhead gap. If buyers continue stepping in, we can fill that back to 493, and that confirms a double bottom on the daily. From there, the next target is 511, where the 50-day moving average sits. If we lose 476, now we have an H pattern that brings us right back to 468 and the 200-day MA, but upside is my preferred path here. Amazon is also setting up for a potential higher low. Support is at 227. Two possible paths. One, we pull back into 227, maybe even slightly below, reclaim it, and push toward 239. Two, we show early strength, break above Friday's 231 high, consolidate, and then push toward 239 and eventually 250. What if we get below 227? Then we have a short into 216.50, where the last low and the 200-day moving average sit. Google has been strong. After recent highs, we pulled back into a base at 315. Upside path, break 327.50, target 333, and potentially higher. Downside path, break under 314, set a larger higher low around 304, fill the small gap, then look for reversal. Meta has pushed right back to its earnings gap breakdown. If we break into the gap, especially holding over 680, this has room all the way up towards 742. Volume picked up last week after Meta announced spending cuts to the metaverse side of the business. Market liked that. Friday's candle was an inside day, so break above, long into the gap, break below, short to fill the lower gap. But if we hold 650, that becomes the daily higher low that sets up a strong move into the earnings gap above. Robinhood, last one for today. We broke out after a gap up, hit 137, and now have a clean pullback forming. As long as we hold 129, I like the long setup back to 137 and potentially up to 148.85. But for newer traders, the safer entry is simply wait for a clean break over 137 with a retest. One more quick announcement before we wrap up. Starting in January, I'll be opening a $500 small account on Robinhood and trading it throughout the year with you. I'll share the setups, the risk management, and the lessons along the way. The goal isn't to get rich overnight, it's to show you how small, disciplined accounts can grow into something meaningful over time. If you want to join the challenge, hit like, subscribe, and turn on notifications so you don't miss the kickoff video, and drop a comment with the word IN so I know who's all in on their finances in 2026. I hope this breakdown helps you map out the week ahead. Remember, patience pays, levels matter, and volatility around the Fed can create some of the best opportunities of the year. I'll see you in the next one.